discussing all about stocks on ET now. Thank you for staying with us. Amrish Balaga is with us as well in the studio. It's time now to talk about the second stock he's brought for us this week. His growth pick this week is IRB Infra. Take a look.
IRB Infrastructure is a construction company that specializes in the building and developing of highways. The union budget this year promised to thrust in infrastructure development, especially highways, and this move is expected to give business a boost. Currently, IRB has an order book which will be executed over the next 3 years, giving the business adequate revenue visibility. Most of IRB's current projects are expected to be commissioned in FY14, while its Ahmedabad-Badoza project will be commissioned in FY16. On the earnings front, IRB has seen steady growth in revenue, with the engineering and construction segment posting a 12.7% growth due to faster-than-expected project execution.
Right, so that was IRB Infra. It's one of the companies that stands to gain from the projects being awarded by the National Highway Authority this year. Tell us what your expectations are from the company, Amrish.
Basically, it's a pure highway play. And with the sort of order flows which will now start from NHAI, which has already started to a certain extent, I think IRB will be one of the major beneficiaries. Again, the current year we expect an EPS of about closer to 14.815. And looking at that, it seems quite cheap at the current levels. In fact, we are looking at a target price of about 240, 250. But again, I would not say that this is an extremely long-term play like Larsen & Toubro, but surely it's the next 1.5 to 2 year play.
So as a retail investor, if I'm buying into a company like this, what are the risks involved? What should I keep in mind when buying this stock?
No, risk basically would be the order flows, which we have been expecting should be good even going ahead. In case the order flows taper off, yes, I think that's one big risk for IRB. And secondly, being a mid-cap company, management always is
always something you should keep your eye on. And in terms of me putting this in my portfolio, do you think there's a certain percentage of the portfolio it should be capped at, or how much would you recommend we buy as this?
I won't recommend more than 1.5-2% of a portfolio in a stock like this. If you're talking of Larsen & Toubro, I can easily tell you have at least 5 or 6% of your portfolio in Larsen & Toubro. But when you're talking of a stock like this, not more than 1.5-2.
Time now for us to quickly take a few questions that have come in during the week. Shripati has written in, he has 100 shares of RCOM stocks which he bought at 292 back in 2009. Now he wants to know if he should continue to hold this stock. We know the stock ended the week at 84 rupees. The company has got a nod from the Singapore Exchange for that listing. It's a very large listing. Do you expect it to recover the levels that he's talking about, or do you think that there's very little hope at this point?
At this point of time, there's very little hope. I think the only hope for the investors would be in case there is a takeover bid for the company. In that case, possibly you could see levels of about 110, 115. But I think going beyond that would be a bit difficult.
All right. So if you see levels of about 110, you should be exiting that stock. Sorry for the bad news. Our next question comes in from Manoj. He wants to buy Bharti Airtel, Kane India and Coal India with a 2 to 3 year time frame. He wants to know, is this the good level to buy those stocks? And what target should he have on it? So, long-term investor, what would you recommend?
Absolutely. I think these are 3 stocks which you've been recommending for the last couple of months. And yes, I think these are the good levels to buy. But surely keep some money for lower levels because, like I said, we are expecting the markets to correct further from here. And when the markets correct further, you can expect these stocks to be available at slightly lower levels. So, Bharti, again, at the current levels, and then look at levels of about 310 to buy more. Kane India similarly could fall either 3 or 4% more from here. Pick it up at those levels. Coal India, 310, 320. I think you should buy.
So, in spite of the fact that it's signing the FSAs with the power companies, you still think Coal India makes a good buy at this point?
Yes, no doubt, because that's already there in the price to a large extent. Because there has been a spate of adverse news for Coal India in the last 4 or 5 months, and we have seen the stock correcting from those 380, 400 levels to the current levels. So, it's already there in the price.
All right. So all of those are good stocks, and you heard the new targets on all those stocks. Good luck with that investment. Our last question comes in from Said. He has 228 shares of ONGC, which he bought at 281 rupees. He wants to know if he should hold or sell that stock end of the week at 260. What should you be doing with ONGC?
As long as the subsidy burden is there, which I think is going to be there for quite some time more, it doesn't become a fundamental buy. But yes, it's a trading bet. It moves between those levels of 355 to 255 to 285. So he should look at buying closer to 260, exit at closer to 280, 85 levels.
All right, so that's the call on ONGC. Unfortunately, we've run out of time on this show. Thanks for tuning in. Remember, you can send in your stock portfolios and your questions to the email ID that's at the bottom of your screen. It's always a pleasure to have you on All About Stocks. Thank you for taking the time out. You can also reach us on our Facebook page as well. Thanks for watching.